U.S. stocks stall out following Asian sell-off on virus fears. U.S. stocks were mixed Tuesday in the first trading day of a holiday-shortened week, following up on losses around the world as worries deepened about a virus outbreak in China. The S&P 500 opened trading with modest losses but nearly eliminated them all as the morning progressed. Asian stocks dropped sharply, while European markets also stumbled on concerns that the new coronavirus spreading in the world's second-largest economy could hurt tourism and ultimately economic growth and corporate profits. 6 people have died, and 291 have been infected in China, just as people in the country were preparing to make billions of trips for the Lunar New Year travel season. Investors are looking at playbooks for past outbreaks, such as SARS in 2002 to 2003, where airlines, railways and other transportation companies saw their stocks slide the most, followed by retailers and hospitality companies, according to strategists at Jefferies. Within the S&P 500, stocks of U.S. companies that cater to Chinese tourists had some of the biggest losses, along with general travel companies, such as casinos and airlines. Gains for dividend-paying stocks and technology companies helped more than halve the index's loss as the morning progressed. Tuesday's drop for the index follows a strong run, which had sent the S&P 500 to records. Fears of a possible recession have faded, and investors expect the Federal Reserve to keep interest rates low, and the S&P 500 has risen in 13 of the last 15 weeks. U.S. companies are in the midst of reporting their earnings results for the last 3 months of 2019, and early indications are encouraging. Less than a tenth of S&P 500 companies have reported their results so far, but of them, 72% topped analysts' forecasts for profits. Those forecasts were low, to be sure, with analysts saying S&P 500 profits fell last quarter for the 4th consecutive time, according to FactSet. Keeping score, the S&P 500 was down 0.1%, as of 11:45 a.m. Eastern Time. It had been down as much as 0.4% earlier in the day. The Dow Jones Industrial Average slipped 32 points, or 0.1%, to 29,31, and the Nasdaq Composite was up 0.1%. Roughly 4 stocks fell for every 3 that rose on the New York Stock Exchange. Chill in China. China confirmed many people's fears late Monday when a government expert said that the new type of coronavirus affecting the country can transmit from human to human, increasing its potential spread. The outbreak is developing into a major potential economic risk to the Asia-Pacific region, said Rajiv Biswas of IHS Markit in a report. Biswas pointed to the example of the 2003 outbreak of severe acute respiratory syndrome, whose economic impact was felt as far away as Canada and Australia. Asian sell-off. The Hang Seng Index in Hong Kong dropped 2.8%, and stocks in Shanghai fell. For more on this story, visit the news article link.